Alrighty, good morning, guys. I appreciate y'all being here, playing some of that NFL music. That's right. But yeah, thank you guys so much for joining up this morning. I will say it has been a crazy day so far with stocks, honestly, all over the place across the board. We have McDonald's popping up with their earnings, like Bill says, because of my McRib consumption. That's right, 4 McRibs in 3 days so far. We'll see maybe if I can get another one today. I will say I'm already getting sick of them, though. I'm not going to lie. I'm already getting tired of them. But here we go, Spy. Let's get up today. Let's break that big 385 resistance that you have up there. If we could do that on Spy, I think we would be setting up pretty well for a decent little pop to the upside here. I'm going to make a nice purple line for us on the Spy. If we can pop up to that, that would be pretty nice today. At least we would retest that resistance, but I think we could live on that one. Yeah, I know Xbox, right? It's actually so easy to get those claims, but on that, for some reason, I can't get it. I don't know what it is, but they don't find that one for some reason. Xbox, it's weird. Trust me, we've been copyright claimed plenty of times, though. Like anytime I show any type of movie clip on here, instant claim. But the thing is that even though it gets claimed, Xbox, like we're not getting rich off of the live stream or anything like that. So it's not like we're losing out on anything crazy. So that's good, I guess. Hopefully YouTube don't hear me saying that though. They're gonna get it. They're gonna get me now. But yeah, what a crazy morning, guys. What a crazy day. Thank you, Keisha, Marty, Bill W, Jamie, George, Xbox. Marty says, I don't think I've tried that McRib. Marty, I used to not like them. I'll be honest. I used to hate them. I used to never get the McRib ever. And then actually, whenever I was in high school, they had, I guess, like the high school version of the McRib there. And that was actually really good at high school compared to the other food that Barack Obama's wife decided we could eat. So it was honestly a pretty good thing at school. And then it started to make me like them in real life. So pretty crazy, but that's how I started liking them. But yeah, I used to think they were fake meat and all that stuff until I watched some good videos on how they're made and processed and prepared. Then I realized it's not quite as bad, but obviously though I get what people say. I had someone tell me yesterday it was just like eating a flab of fat or something, and I guess it does kind of taste like that, but it is what it is. Come on, Spy, let's get up there. All right, Meta, are you gonna bounce around $100, or are you just gonna keep dying on us? I mean, how much lower can it go? Oof. Wow, that's rough, guys. I mean, oh, I'm scared. I hate seeing moves like that. We need to see some better upwards momentum, guys. Whoa. I'm getting scared on the day. Yeah, Tesla's actually doing quite well, bouncing off that 224 support. Got to keep an eye on that thing. Looking pretty hot, you're right. Let's go, Tessie. Let's go. And B Square says, good morning, chip stocks. Uh-oh. AMD, there we go. Getting an explosion. Guys, that AMD play yesterday in the bonus setups channel on Discord was amazing. If you guys have access to that channel, definitely take advantage of some of those plays. Some of them are quite well, I'll say. I mean, they are fantastic sometimes. Like yesterday, that play on AMD was spot on, and the bot play on Baba was even better. So both of them would have done amazing, though. But yeah, good morning, chip stocks. Let's take this good movement for sure. How come Intel's not moving? Oh, all the other chip stocks are kind of breaking out. Intel needs to start breaking too. How's Nvidia? Yeah, like look at that breakout. If only Intel could have that. It's a big pop above 133. It sucks that most of it happened in pre-market and after hours, though. That kind of is a little bit of a sad thing about it, but it's not too bad. Not bad. But yeah, just let me know what stocks you guys are watching. We'll check them out. Keisha says, let's go Bank of America. Hell yeah, Keisha. On that daily, it's looking great. We're still popping up. I mean, how many more days are we going to pop up here? I mean, there we go. Come on. Yeah, Intel does have earnings tonight, Keisha, doesn't it? That's going to be an insane thing when it happens. Watch out for those earnings with Intel, guys. They need something to turn them around. I mean, they are getting a little rough, to say the least. Yeah, let's hope to see some better stuff. Hey, Marty, so you're asking about MULN. Someone actually asked about this yesterday, I think. Um, MULN, it's not my favorite stock ever. I think someone asked me about it in Discord, but it's not my favorite setup. It is moving quite well down here at the bottom. Now, what I will say is that almost every EV stock, well, not every EV stock, but like MULN, Rivian, Lucid, stocks like that have been moving up over the past couple weeks. Here, I'll show you Lucid. There's Lucid. Here's Rivian, and then MULN. So MULN has been doing pretty well, but it's such a cheap stock, guys. 55 cents. Personally, it's not a play for me. I will just continue to play something else like Rivian or Lucid if I really have to. But it's not worth it, guys. I think that going forward here, I would just rather eye up Rivian or Lucid. And when I see RIVN's chart, especially Lucid's chart on the 5-minute, you can really see this nice head and shoulders pattern started to form. Maybe we'll see a nice bullish uptrend. You know, it's been a long time since we've seen a trend reversal on Lucid, and looking at the trend right now, it's still down, but looks like we're getting close to a huge trend line. Let's try to draw this trend line out real quick. I think you guys will appreciate this one. Yeah, something just like that, kind of. Go away. Put a weird line right in the middle of my chart. But yeah, you can see how that has multiple bounces on it there. If we break this to the upside, I would just rather just play Lucid, but I don't really have a preference. If those, as long as the EV stocks go up, they'll all probably do pretty well, so keep that in mind. Shops up 10%. 10%. SHOP. Xbox says that he asked about it. I remember seeing it around 0.3 or 30 cents a week ago. I sold MULN around $1. Wow. Yeah, good thing you sold it, Xbox. That thing's been terrible lately. But hell yeah, so let's go Shopify. 10%. Whoa, continuing up with earnings. Very nice. Very nice. Yeah, we got a huge breakout there. That's awesome. That is awesome. Love to see that. Love that. Yeah, Saram says shop with a nice move up along with Teladoc. TDOC. Let's see. Teladoc. TDOC. I'm actually curious. I want to look up this Mullen Automotive real quick. Maybe see their I want to kind of see their website here. Okay, so they're building like, oh. Okay. Okay, I could get into this. Look at that. That's actually not bad. That looks pretty good compared to a lot of cars out. I like that better than the Tesla SUVs. No lie. It looks like a Porsche. That looks like that Porsche Taycan or Taycan or whatever they call it. Gosh, I can't say that. Porsche Taycan. I think it's a Taycan. Wow, it's actually a pretty cool looking car though, can't lie. Let's click reserve. Let's reserve one. Nice, okay. Interesting. Keisha says she got 600% on her Service Now play. Holy shit, Keisha. Let's go. What a play. That is amazing to see. Great stuff. Great stuff. That is awesome. That is great. Holy shit. Whoa, guys. I gotta show you guys this picture real quick. Holy shit. Wow. Wait till you see this. In Discord, a member named Deep Sea, I think this is Christian's friend, he played some insane plays on meta last night. Look at this move here. He made 79 grand on the 110 puts for meta. Oh my gosh. And 34 grand on the 105 puts. So, holy shit, guys. That is an insane pop. The guy made a total of 116 grand or 322% of his account today alone. So what a move, what a gamble on meta, and what a payout. I mean, that is awesome for him. Up over 100K on the one play. Very nice. And like I said, his whole account jumped up 300% too. So, wow. Wow, that is something else. I'm just still speechless just looking at this picture, looking at Meta's chart. Can't believe how low this thing got here. It's insane. That is nuts though, guys. What a good move. I know I was waiting all night for the pictures because Christian was talking about this yesterday, of course. He was like, yeah, my buddy's got he's got these crazy meta puts, and we're all like, oh shit. Meta first release and then it went green and we were like, oh no, that guy's pissed. Woke up today up 100K. What a fucking move. Wow. I just can't get over it, guys. What a play. What a play. Yeah, Xbox goes, I'd go buy a house. Let's go check out JOBY for you real quick. Yeah, I know Xbox. Xbox, I'd honestly get a few houses probably. I'd put some pretty big down payments down there. You could have like 33,000 down payments. That might not be bad. $33,000 down payments. Start getting that rental income going. There you go. There you go. Xbox. That'd be the way. That would be the way. Yeah, what a crazy day, guys. I mean, that just has me blown away. It really does. JOBY is not doing bad, though, today. Honestly, doing pretty good. We'll take it. We will take his DraftKings up. Holy shit. Let's go, guys. DraftKings is running. Let's get some W's in the chat for Keisha, though, guys. That was a good play on her Service Now. That was actually a pretty good move. So give Keisha some W's. She's always sharing some nice gains here in the chat. I appreciate that, Keisha. Yeah, Keisha, it was a good move, and yeah, like you said, I wonder how he knew it would tank. But I will say, Keisha, there's been a lot of people talking about Meta doing bad because of the ad revenue being down. We saw Snapchat's ad revenue lose, Google's ad revenue lose, and then yesterday everybody was too scared to play Meta. They were all like, I remember everybody was like, "Oh no, they were like, it's just so risky and blah 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 blah, and it's probably gonna pop up. The downwards move. Here's what I really heard: the downwards move is priced in. Oh, is it? Do you call this priced in? Priced in? It's priced in now. But yeah, everybody yesterday was like, isn't it already priced in from Snapchat last week? Or, I'm just like, no. Unfortunately, it wasn't. But I was hoping it was priced in, but that's what everyone said. It just doesn't work out that way too much, especially when you rely on ad revenue and you're reporting big drops like that. Yeah, Xbox. The thing is, though, is like whenever you own a house, you're not really in debt. Xbox. I mean, only a little bit. You can always sell that house and get all that money back. Usually, Xbox, unless you screw up really bad. You know what I mean? So I get that you're in debt, but you could always get out of the debt pretty easily with a house. Yeah, I used to do rental properties. The good thing is Xbox, if you go into debt on 3 houses, get the rental properties, you can make like 2 times as much money though. So that's the whole thing. You get two more extra rental properties then. Or you could just go for one really expensive rental property. That would be good. That might work too. Keisha said, did the GDP numbers come out yet? Yes, they did, but I will say they are getting extremely overshadowed today by everything else. But yeah, we actually came in above expectations, which was great. That's part of the reason why we're seeing SPY moving. Well, it was moving up pretty well. This is why we're seeing it hold up okay, is because of those GDP numbers that ended up actually being pretty good, which surprised me. I thought we were going to see some pretty bad moves there. Xbox says, I want to own it to live in it. Oh, Xbox, that's not good. That's not good. That's not what the smart people do. Oh, go watch some Graham Stephan videos, Xbox. Ironical says, I know everybody likes Apple to the upside, but I want to bet earnings to the downside. Ooh, that's a scary one, Ironical. Look at it moving down right now. Yeah, I could see it, honestly. I could see iPhone demand going down a little bit, Ironical, especially with all the uh, all the inflation and everything like that. Plus, Apple did report that there was an actual slowdown in demand on their 14 Plus model. So I thought that was interesting. Maybe we'll see a slowdown in Apple. It's possible. It is possible. Bill says Apple's moving down. Yes, it is. I was just eyeing that up. It's sitting right at like 146. What a good support. We've bounced off of 146, guys, a few times the past couple weeks. So watch for it to potentially hold up today. But I will say it is especially red. Like, this is actually pretty deep down. But give me 1 second, guys. I'll be right back. Just give me 1 minute. Got to take care of something, but don't go anywhere. I'll leave the chart here on good old SPY for us. Maybe we'll get to see it break support and start dying off. Xbox says, I don't like the idea of renting over owning. You know, Xbox, I don't think you're understanding what I'm saying. I'm saying you buy it, you own it, and you rent them out to other people. So that's kind of what it is, Xbox. You still own it. You're just renting it so that those people pay your monthly payments. That's what it is. Hell, sometimes you might even get them to pay $400 or $500 over your payments, and then you're making $500 a month. That's the way to go, Xbox. Yeah, you still own it. Trust me. Yeah, you own it, but you're the one renting it out. You're the tenant. That's the cool thing, Xbox. That's what I'm talking about. Yeah, you still get it though. And hell, you know, if someone rents it out for 6 months, you could always go live in it again after, after they are done with their lease or whatever. Just make sure you don't get anyone that destroys all the walls and stuff. Then you'll get in trouble. Sometimes I've seen some weird stuff happen, but you better have good insurance. I'll say that. Hopefully you have some insurance. Some good insurance. Yeah, imagine that Xbox. You own 3 properties. Each property makes you, like, let's just say 400 a month. $400 profit after all of your taxes and insurance and all that stuff. 3 properties, $400 profit a pop, $1,200 passive income a month, not even doing anything. Yeah, I mean, I still would recommend renting out a nicer place, even. I mean, I get you might want to live in it, but as far as being smart with your money, it'd be a lot smarter to not live in it and just rent it out. Because, the more expensive the house, the more higher those monthly payments are going to be to you, and you can just, get more and more money out of them. But yeah, I'm just waiting for this big drop down, Keisha. I'd love to own a house though too. Xbox, a big nice house like you're saying, and I'd love to live in it. But I would sacrifice my younger years and just, I would sacrifice it and hopefully maybe then get a Ferrari and a big house in a couple years. There you go. I'm a very big believer in sacrificing some of the better things in life while you're young so that you can save. I'm a big believer in that. That would be pretty funny, Xbox. That would be funny. Yeah, Xbox. It's like yeah, they do all that good stuff and then they rent some like super expensive like luxury suite in the city, for like 10 grand a month or something. Oh, that'd be funny. I'd rather switch from Meta to BA. Bravo says. I don't know. Meta is tough, isn't it? I feel bad. That is bad with Meta there. Wow. I don't think I'd rather get Boeing though. I'd looking at the two charts, I think I'd rather still stick with Meta myself, but I feel like Meta still has a great chance for the future, guys. I mean, I know it's down a lot right now, but for the future, I think Meta will be fantastic. I know right now it's looking extremely rough, but it is what it is, honestly. It's not overly crazy. They have a lot of big stuff in the works, like those headsets, augmented reality, and then of course the metaverse. So keep that in mind, guys. The metaverse will eventually be a big deal. It really will. I've seen a lot of stuff with the metaverse, and it's gonna end up being pretty extravagant one day. And there's actually already some metaverses out there. Like, I don't know if you guys have seen some of these games that have real economies, like RuneScape, and I don't know. There's a few other games that are online as well that have actual economies where the money on the game is tied into real life money. So I don't know what the numbers are, but like right now on RuneScape, now this is old school RuneScape for any of my scapers out there. But on RuneScape, every million coins on there equates to 40 cents in real life. So if you keep making money on that game, you could essentially make money in real life. And people actually do this. They make money on the game, and the money on the game is actually worth more than their currency at their country in real life. So for example, some people that live in like, I don't know, Singapore or something, or I'm trying to think even like crazier countries like Venezuela or something, those types of countries, people will actually play these video games, make money on them, sell the money for real life money, and that's how they live. And that's pretty crazy. I can't believe you can just make real life money from playing a video game. And, well, from playing a game and using the game's money, but very weird. Zuck needs to retire. Oh. Well, we know that's not happening, Bravo. I don't think the stock's trash though. It's definitely trash right now. But I think going forward though, the stock still has a good chance. I mean, it's still a long way from IPO, which is good, but Bravo, if that does go back to 20, that would suck. I hope that doesn't happen. Maybe 80 will be where we hold. I'm hoping it's 100, but we'll have to see, Xbox or Bravo. You're right. It's definitely been trash, and that ad revenue's trash. That's for fuck sure. Well, Bravo, that's the thing. It's terrible now, Bravo, but if you keep buying into it and you keep averaging in, when it starts popping back, you will be extremely, extremely happy. So I'm not going to take the L on it. I'm just going to keep buying in and selling covered calls and bringing my price down. And, I think right now on, let me find you my average price because I don't want to lie about it, but I do have it somewhere here. I just can't remember the exact spot. So my average price on Meta is 168. 168. So I'm definitely in pretty high myself. Right here where my cursor is where I'm in. Right here. Stock's now down to there. I'm going to keep averaging in. So watch out. My average will probably end up getting down to like 130 if we can stay here enough. If it keeps going lower, it'll get even better. So, wow, you sold out completely, Bravo. Wow. You must have bought in pretty early, Bravo. I'll say that. Yeah, you were in at 213. Wow. Bravo, I know it's the worst, but like at the same time as well, like let's go back here. Like let's go back, all right? Here. 213. So, let's go back. So, Meta was at 213 and it was on April 22nd of this year. April 22nd. All right. Let's go see how other stocks have done since April 22nd. Like let's see if other stocks have been falling down, Bravo. I know that these are different types of companies, but I mean, like, look, this stock fell over 50%. That's Palantir. They fell well over 50% within that time as well. What about Tesla? April 22nd. Let's see. April. How come it's not weekly chart? Get out of here. So we have April 22nd on Tesla. They were at 336. Now they're at 225. Yeah, I mean, just about everything's down from that same exact time in the past. But I feel you, Bravo. I mean, it's been rough. You know, it really has. Like you can't get around it. No matter how much Mike or myself loves Meta, we can't get around. It really has been shitty this year. I mean, it's terrible. It has. It really is. It's going down a lot. We're seeing big gaps. It's not slowing down. But what I will say though is that you want to be buying at the time of peak fear usually, and it's not like Meta is just gonna turn over and go out of business tomorrow. They're not. They make a lot of money. They're very profitable, and that's the good thing about Meta. But like you said, terrible movement, terrible stock right now. It needs a big turnaround. It needs a big momentum shift back to the upside, and it's probably not going to happen here in the short term. So we'll have to see. It sucks. Yeah, I've heard of it, Bravo. I've practiced it a few times myself. Of course. Yeah, I'm sure everybody's rage sold a couple stocks. My recent rage sell, Bravo, was Intel, actually. Intel. I rage sold Intel. I bought in at... So I've traded Intel a few times over the past few years, guys, okay? I have to say this for the context so it doesn't look like I'm just buying Intel up at the top here. So Intel over the past few years, during COVID, it fell down. I bought it during COVID. I played this nice pop up to this upside area here. I think I played it from like 45 up to 60. So pretty good move. Nothing too crazy, but definitely a pretty decent pop there out of Intel. Pretty good gains. So Intel fell back down to support. I buy it again, and then I sell at 60 again. So, we have two nice pops that we won on Intel in a row on shares. Did very, very well. Then it fell back down to support again. So, what do? I buy it on support again. So, yep, I bought Intel on support here for a third time. But this time, support did not hold up, and we fell down. I ended up getting out somewhere around $36. So I'm glad I got out soon before the major drop really happened. But that was a bad break of support there, and it was a rage sell. I was pissed about that one, we'll say, but it happens. We were successful twice on that support. Eventually, that's going to break through, especially with all the bad stuff going on this year. So that's part of trading, though. That's part of life. I'm 2 for 3 on Intel right there. So 2 for 3 is still a pretty good stat. If we buy Intel low here sometime soon, I'll probably end up being 3 for 4 on it because, hell, if you buy Meta or Intel at these shares, at these levels right now, you'll probably do very well. Marty Longoria says, you think Meta might keep going down tomorrow? Yeah, I mean, it very well might. It very well might. I will say we're at the big support at $100, so you have to watch that very closely. $100 could end up holding up for us, and if it does, that would be very good for Meta. So hopefully it holds up here, but I don't think it will. It's looking pretty tough, I will say, and it'll probably end up falling down. I could see it falling still. Marty says, I think I want to buy into Meta, but should I wait a bit before buying? You know what, Marty? Honestly, I don't think I would. I'm going to be honest. If I were you, I would start averaging in right now. Sometimes we see big gaps back to the upside after these earnings. And if it does randomly happen with Meta, I'm not saying it's going to happen, but if it does randomly happen, I think that, you'd be very happy to get in at 100. And if you get in right now, Marty, and it keeps going down, you can keep averaging in. Just don't go in too heavily right now. You know, you want to have enough money left over to average in. No, I would touch it. I don't care what Bravo says. I'd probably touch it, Marty. Honestly, it's a great support. Sometimes these stocks end up really ripping back after this stuff, but it's going to be risky. I would keep a lot of money on the sidelines just in case it doesn't pop, because you're going to have to really average in if it doesn't. It's a scary play. It's a scary move, but you know, we could wake up tomorrow and it's all the way back up to 110 and then you missed your opportunity. You know, and you'll just keep kicking the can down the road. I've seen it happen all the way back to the upside before. Yeah, do not go in too heavily. That's the big thing. Don't go in too heavily. And like Tesla FSD Houston just said, sell puts on it. If you want to get shares of this, please sell the 95 strike put, sell the 100 strike put, do something. That would be a great play as well. Tesla FSD, good call. That would be the best course of action, actually, would be to sell a put. You could sell a 95 strike put right now. That way, if it goes down to 95, you get filled. If not, you win on those puts you sold. So, not a bad way to go, though. And like I said, definitely do not go in too heavy with it. You need to have a lot of cash on the sidelines for this one, in my opinion. Karan says NFLX, Netflix. NFLX up around 1% today. There we go. Continuing up very well after their earnings. There we go. Nice to see. Let's see Snapchat. So here's a good example. So look at Snapchat, guys. Here's a perfect example. Now, keep in mind, every example is different. So I know that this is only one thing, so you don't gotta get overly technical with it, but here's Snapchat. You can see they gapped down with their earnings, and now they started to rip back up. Now, they could very easily still break this low and go lower, but when you see these big gaps down, sometimes you see recoveries back up like this. Now, I'm not saying this is going to happen with Meta, but that is kind of like the move that if you're trying to get in for the long term and you see it at $7.50 and then it pops back up to 10, you're going to be like, God damn it, I missed it, you know, and all this stuff. So, might not be a bad little play. Karan says Netflix to 310 question mark. 310, let's see. Yeah, I could see it. I could see it. I could see up to 325. Maybe not today, but overall, yeah, I could see a good move like that. Karan, great play. I like that one. Yeah, really solid move. Marty, do you mean you don't know how to sell puts or you don't know what selling puts are? Just let me know. I can help you out. Shorting puts is actually pretty easy. Now, people get very confused by it, but it's really not confusing at all. It's confusing whenever people try to read how it works. But if I showed you, I think you'd get it. Just let me know if you don't know. I can show you real quick. It's honestly real easy. Bravo, are you watching anything else today besides Meta? Are you in any big stocks out there, Bravo? Got some pretty good moves going on though. Come on, Tesla, let's keep bouncing. SPY. Whoa! Whoa, 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 whoa. What was that candle I just saw? Whoa, look at this move on SPY. I just posted a nice little poll for you guys, so please feel free to vote in that. That would be nice to see. I hope so, Bravo. Keep selling it today. When you say selling it, what are you doing? Getting puts? I'm confused. Let's hear it, Tom. I'm trying to find some good movers here. Let's see. Shopify's still up a lot. Shopify's still breaking out with those earnings, guys. There we go. Boeing's not bad. Come on, Boeing. It's having a good pop like Bravo was talking about earlier. Looking pretty good, actually. I'm liking this one. Let's go, Boeing. Man, they died with their earnings yesterday, though. Let's see if Kraft Heinz, how are they doing? KHC, still doing well. I love this stock, guys. Kraft. Oh, I love this stock. Now, keep in mind, Kraft is a little bit risky, but they had an issue in the past that they kind of worked around now, so got a little bit better for them. Got better. Yeah, what a crazy day, though. Just crazy week overall. A lot of crazy events going on with the GDP numbers. We obviously have all these crazy earnings coming out. Here is the list for tonight. We're going to have Amazon, Intel, Apple, Pinterest, US Steel, and T-Mobile. Even FSLR, First Solar's reporting. So watch out for these ones, guys. It's going to be very influential night. Amazon's going to be huge heading up into the holidays. Apple's going to be very important. I'm very curious on what you guys are looking at here. It looks like so far in the poll, we have 4 votes and 75% of you guys voted for Apple to miss and the stock tanks. So, wow, everybody's bearish on Apple, aren't they? Good thing Apple doesn't deal in ad revenue too much. Catherine says, do you think because all the big techs have missed, no one trusts Apple or Amazon to come in good, so they aren't running up to earnings? You know, I could definitely see that, Catherine. I think that is scaring some people out of these stocks ahead of earnings, 100%. I mean, we've seen a lot of bad reports. So, yeah, the fact that Microsoft went down isn't very good either for Apple. I know Microsoft and Apple they're not correlated, of course, but they tend to move somewhat similar. Now, they are totally different companies, though. Obviously, Apple, it's going to really depend on that iPhone revenue and stuff like Apple TV and all that stuff, whereas Microsoft has to worry about Windows and server, money from their cloud servers and all that type of stuff. So it's very complex when you get into those companies. But yeah, Catherine, I will definitely say that. Yeah, I think that that's 100% what's going on here. But I don't know. Apple is a very solid company. They usually do pretty well, so I'm curious what they do. I would not be surprised if they went against the majority and kind of surprised people. I wouldn't be too surprised. I could definitely see it surprising a lot of people. So Rom says J and J is breaking out. Johnson and Johnson. Let's go. There we go. Got the big break there. Nice. Come on, Johnson and Johnson. Let's go. This is my free day trade today. I have it up above 172.75, which it just happened. Hopefully it can actually get a nice run and not fake us out. No fake outs today, baby. Sorry, guys. I had a question in Discord just now, but had to give a quick reply. Ha, Keisha goes, J and J, you know this makes my heart happy. Hell yeah, Keisha. I knew it would make you happy if you saw it. SQ is moving quickly, Catherine says. How much do you think it can go? Wow, it is moving quick. It's holding on support right around 59 and 60, so looking good there. You know, Catherine, I would almost think we could maybe come up and retest 63.50 today if the market stays bullish, which is a big resistance there. So watch out for 63.50, Catherine. That's going to be pretty big. 62.50 is going to be a pretty big next resistance to watch out for, though. We've been seeing a few bounces around here the past couple days, and it's been pretty crazy. Yeah, good old square though. I like this one, Catherine. It's been low down here for a while. It's been consolidating, bouncing off support a lot. I think it's definitely due for a nice move back. So let's see if it can happen. Some of these bad earnings have been kind of dragging these stocks down, though. It sucks. Come on, DraftKings, let's go. Get back up there, please. Oh wow, earlier Bravo literally just rage sold it. Wow. Wow, man. I just cannot believe meta right now. How about good old McDonald's though, guys? McDonald's, let's go. Come on, McRib. Let's go. Bill W should be winning on his calls. Mm, wow. Wow, that's crazy. I'm seeing some good resistance on SPY intraday right around 384.50. So watch out for that, guys. 384.50 seems pretty big. All right, guys. It's been a crazy day so far. Lots of crazy movement across the board. I really like that support on SPY though, right around 380 to 380.50. I think that's still looking pretty good here. We'll have to see if it can hold up or not. It almost looks like a head and shoulders pattern. Wow, this is a pretty good head and shoulders pattern, guys. I'm gonna have to talk about this one. Let's go check out that heat map, guys. I know that thing is going to be looking rough today. Let's see how rough, though. It's actually not as bad as I thought. I mean, look at that. We're actually seeing some green. Like, what's happening? It's crazy. Um, Xbox, I'm a little bit lost. I don't know what we've been going into so many things. I don't know which thing you're talking about here, Xbox. I'm not trying to skip over anything here. I just, sometimes we start moving through stocks and I get a little bit lost on what your question was for. TNX keeps going down though. Bravo's talking about good old TNX, which is a huge thing to look at here. Yeah, we need this to go down. Usually rates run high before the Fed meeting. What do y'all think? Oh, wow. Yeah, that's a tough one, Bravo. I would think personally that these rates might keep running down, but they are expecting to still do the 75 basis point increase. But I think we'll still see a good short-term downtrend out of the TNX. It can go down a little bit more, I think. But I do think, though, that maybe in the middle of next week, after we get like maybe a couple more red candles, we'll get to start going back up there. So it seems pretty good. Oh, Xbox. Oh, shorting puts. That's right. Thank you. Sorry, I got so into everything else. I was so confused. I was like, what? Yeah, here I'll help you out though, Xbox. So yeah, it is easy, but when you read it, it definitely is difficult. I was waiting for somebody to type in the chat to show them, but I see you did now. I was confused. So sorry for that, but yeah, it's real easy, Xbox. So here's how easy shorting puts are. So I will show you right now. Let me get to my meta options chain. All right, so you might need to go to a meta options chain to see what I'm talking about here. So if you're going to short a put, first off, you need to find a strike. Honestly, the strike when you short puts, it is important. Well, I should say the expiration is obviously not as important as the strike is. So I'll tell you a little bit more about the strikes. But first, you have to pick a nice expiration. So let's just say in this case, we're going to go to the November 18th, just under a month away. So Meta right now is all the way down to 101.88 with a recent low here of $97. So if you wanted to buy Meta right now and you wanted to get, here's another thing. Whenever you short puts, it's dealing with options contracts which go in 100 share lots. So each contract has 100 shares in it. This is very important when we get into the nitty-gritty stuff here. So I'm looking at the November 18th, 2022 100 strike puts, and they are costing right now $460. Okay, so what I would do right now is Meta's at 102. If you wanted to buy 100 shares of Meta at this very moment, you have to buy it at 102. You can't get it any lower. If you sell this put at $100, you're going to have to, you're going to have to throw up collateral for 100 shares at $100. So that would be around 10 grand. Now, if you have a different broker, you can go into margin and there's ways to work around it. But here's what you'll do. You'll get Meta. It's at 102. You'll take the 100 strike put and you'll sell it to open and you'll enter the position at 4.65 right now. Now, as Meta starts to go up and the closer we get to expiration, as long as Meta is up above 100, that put is going to start losing value due to theta decay and all the other Greeks that affect options pricing. So the theta decay is going to kill that option as it heads into expiration. And as long as Meta stays up above $100, or yeah, as long as it stays up above 100, you're going to get to keep all of your $460 that you shorted on Meta. So that's option one. Option one is that Meta stays up above 100 and you don't get any shares and you just win that $460 that you took on the position. Simple as that. Now, if Meta goes under $100 on expiration day, so if this option expires and Meta is at 99, you're going to have to buy 100 shares of Meta at $100, even though Meta's lower than where you bought it. But here's where this comes into play. So you'll also get paid that $460 that you originally shorted the put with. You'll get paid that money, plus you'll have to buy the shares. So it's almost like you don't really own Meta now at $100 because you have $465 that you're getting paid to own it at 100. So you can pretty much go down 4 points. It's almost like you own Meta at 95.50 now because of getting paid that money. So this is where shorting puts, it can be a little confusing, but it's honestly very, very easy. There's only a couple things you really need to worry about with this. Obviously, you need to be doing this on stocks that you are comfortable holding for the long term. Do not be doing this on something like AMC all the way up at the top. That's not how this works. You need to be doing this for something that you're comfortable holding for the long term. Now, you can do shorter term strategies with it, but it's very important to know that you really want to do it with stocks that you're comfortable holding because, you know, like for example, you could short that 100 strike put with Meta right now. And like I said, your average price might technically be like 95, but if Meta really does keep flying down and it goes down to 80 or something, then, you know, obviously you're going to be down quite a bit. So you need to be careful. You need to still have a lot of money left on the side to average in if it goes against you and stuff like that. So, but here, I'll pretty much explain it now the easy way. So here's the easier way to explain it. There's two possible outcomes here. Number one, Meta stays above the strike price that you shorted at. So you short the 100 strike put. If Meta stays above the strike, it's simple. You keep all the premium for the play. So all of your $460 you get back and you don't have to buy any shares. Simple as that. Option number two, Meta goes under $100. You have to buy the shares at 100, even though Meta's lower, and you're getting paid $460 to do it. In simple terms, those are your only two options really that are going to happen here. Now, there is stuff where you don't have to get the shares if you don't want to, but if that's the case, then you're going to have to pay the premium. And right now, the premiums for those 100 strike puts, like I said, are $460. If those end up going up to $480 or $1,000, you're going to lose like $600. But then you won't have to buy Meta shares if Meta tanks down to like $80 or something. But you know that's honestly not the best way to do it. Only do it on stocks you like and stocks you're comfortable averaging in with, and you won't even have to worry about that. But that's how it works. I know the first explanation was probably pretty confusing because I was trying to really make sure that I hit a lot of key points for you. But the second explanation is pretty simple. Really, like I said, there's really only two ways it can go. You know, it either closes above your strike and you keep all the premium, simple as that, or it closes below the strike, you get shares and the premium. So pretty simple there. Hopefully that helped you out. Saram says economic growth data comes as stronger than the forecast. Market may move higher. Yeah, GDP data, Saram. It was a pretty big thing this morning. Let's go look at it on CNBC. Yep, there it is. 2.6%, better than expected. So fantastic to see that with those GDP numbers. Really good. Yeah, really happy for that one. But yeah, I appreciate you guys sticking with me here. Hopefully you guys learned something about selling some puts there. It's honestly a very good strategy. One of the best ways to go in the market. And then it's awesome because if you do end up having to get the shares of the stock, it's simple. Then you just start selling covered calls using your 100 shares. So it's simple. You'll end up owning it at 100. You could just start selling the 110 calls, the 120 calls, the 105 calls if you wanted to get a little riskier. And then you get all that money for selling the calls. Gengar says, this sounds like rocket science to me. I feel dumb, lol. Yeah, I've been doing it for so long that, it sounds easy to me, but it probably sounds really confusing to other people. Xbox says you get paid money to buy stock and you may have to buy the 100 shares, right? Not guaranteed though. Yeah, so you only get paid money to buy the stock if the stock closes under your expiration. If the stock goes up and closes over your strike price at expiration, then you don't have to buy any shares and you only make the premium. So like if you go look, like let's say right now Xbox, you wanted to go play meta to the downside and go buy meta puts right now. They're going for the 100 strike is now at $500. So if that 100 strike put is at 500, pretty much if the stock closes under $100, you get that 500 and you get the shares at 100. If the stock closes up above 100, you pretty much get all the money that put was worth, which is that all 500, and you just get to keep it, but you don't get any shares if it closes above your strike on expiration. It has to be below your strike. Sorry guys, there was a damn scammer in there. Yeah, Xbox, it is actually guaranteed, actually, Xbox. That's one of the weird things with it. But here's the thing is like you're not guaranteed to win. That's the thing with this. You're not guaranteed to win because if you short the meta 100 strike put and meta goes down to $80, you're going to lose a lot of money on that still, so you got to keep that in mind too, because you're going to own meta at 100 and it's going to be at 80 and you're going to be down, what's 100 shares times 20? You'll be down like $2,000 at least. So yeah, like $2,000. So yeah, you only want to do it with something you're comfortable owning, Xbox, because if it keeps going down, you have to keep averaging in. And it's a very good strategy though, because I know some people, Xbox, who make enough money by just collecting the premium that they're able to buy whole positions like Xbox. So like for example, like Mike owns a lot of DraftKings, let's say, okay? Like, let's say, even I do. Mike and myself, we own a lot of DraftKings. Now, let's say DraftKings, it's been going down, right? Obviously. As it goes down, we just keep selling more puts. And then with the shares we do have, we sell covered calls. So we're honestly, like our average, like let's say we bought DraftKings at 44, but over the course of, a few months, we've made like 5 to 10 grand selling all these calls and puts and stuff. Now our average price is really like 25. So it's a little bit strange to say, but Xbox says if you find a strike price at $80 and it goes to 85, you get the premium, correct? Yes, exactly. You just get the premium. Just the premium in that example. But if you had the strike at 80 and it went down to 79 or 78 or 77 or lower, you get the premium and you have to buy 100 shares. Now, this is another thing why shorting puts is weird, is that, you have to front that money for those 100 shares. So, pretty big. That's a big piece of info because, like, you have to have 10 grand in your account then to play a $100 stock. Yeah, crazy day, guys. Crazy day overall. Which price would you pay then? He says, I assume 80. Yes, exactly. You would pay the $80 strike, Xbox. So you'd have to pick up 100 shares at 80 bucks. But keep in mind, it's not really like you're getting it at 80 because you also get paid whatever that premium is to also get the shares. So you can subtract that premium from your average price. Your average then might be like 79 or 78 or something like that, depending on how much premium there is. And Xbox, this works especially well on stocks that are going crazy to the downside because it means that those IVs are usually high as fuck, which means that everybody is pushing up those options prices. And Xbox, when those prices get pushed up, you can take a lot of advantage of that. Now, where a lot of noobs will buy the puts there and overpay for them, you will be selling it to those noobs who want to buy them. And now when those people lose, you're going to win because you're selling them those puts that they're fucking up on, So that's a good way to think about it, Xbox, is like, look at all the gamblers always losing on these crazy puts and calls that are really far out of the money. Who do you think sells it to them? That's a lot of those obviously are brokers selling them, but it works all the same. In theory, that could be my contracts that they're trying to play with. But yeah, it was a good talk, guys. I appreciate you guys asking some good questions. I hope you learned something, Xbox. Xbox, I'm actually going to go on YouTube and post one of the best videos here. Stocked up 2022 strategy. Or maybe it's 2021. It's 2021. Hang on. This is an awesome video. I mean, I think you guys should all check this video out. I actually like it so much that I'm going to play it live here for you guys right now. Yeah, so Xbox calls are the same exact way, just flip it all around. So with calls, Xbox, you have to have the shares first unless you have like level 3 or level 4 options. If you don't have that, you're going to have the shares first, which makes it very simple, Xbox. So if you have 100 shares of a company, and like let's just make it simple, you own it at $100, Xbox, you'll pick a strike price above wherever you sell it or wherever you own it to try and sell out. So if you own the stock at 80 bucks or $100, like I said, you might pick the 105 strike and you'll sell the 105 covered calls. So if you sell those 105 covered calls, you'll get premium for that, just like you will for shorting the puts. So here's where covered calls is awesome, because if it goes up to 105 and above it, well, now you have to sell your stock at 105. But the good news, Xbox, is that if you wanted to sell your stock today, but then you did a cover call at 105, at least 105 is higher than the price today. So you'll make all of that money for your shares up to 105. So for each contract, that'll be 100 shares. So from 100 to 105, you'll make $500 on that 5-point move. Plus, you're going to get that premium for the call. So you'll get 500 for that move. Plus, you might get an extra $200 or $300 just because of that premium for the option. Now, if it stays below 105, which was your strike that we picked here, and you own it at 100, of course, if it stays below 105, you simply just keep the premium. Now, this is what you want, because you can just keep selling these covered calls nonstop and own the stock and collect premium. And even if the stock goes up, a lot of the times, like I might pick the 120 strike, for example, on Meta, it might go up to 110 or 115, but not quite make it to 120. And then I just make weekly income. So get this, Xbox, you own, like, let's just say this, you own 1,000 shares of DraftKings right now, okay? You own 1,000 shares of DraftKings. Honestly, it doesn't even matter what price you really own DraftKings at. The only thing that matters with that is if you don't want to lose your shares, you need to sell calls that are further away. So like, let's just say DraftKings is at 15 right now. Let's say you own it at 15 and you have 1,000 shares. That would be 10 options contracts for November 18th. Remember, I said 10 options contracts here. November 18th, I could go to the covered calls. I'm going to go out to the 20 strike call on DraftKings. It costs $17 right now. Now I could do that times 10. So if I have 1,000 shares of DraftKings, I could make $170 until November 18th as long as DraftKings stays under 20. Now, if DraftKings goes up to 20 by November 18th, I'm going to get that $120 from the premium, for the premium for the calls I'm selling. But I'm also going to make a shit ton of money because DraftKings went up. So I'll have 1,000 shares because it's 10 contracts. Every time this thing goes up $1, I make $1,000. So if it goes from 15 to 20, I just made $5,000 on that play. $5,000, and I made that extra $160 to top it all off. So it's almost like a win-win in that sense. The only time you can really get screwed on selling covered calls is if you own the stock at a certain price and you don't want to lose your share price. But then again, you could always just rebuy, and honestly, the math works out. It's more of just a mental thing that people get into with the calls. Xbox says, I feel like calls is like fishing, but instead of the bait being removed because of the fish you caught, you get to reuse the bait, assuming the price would be under the strike price. Yeah, 100% Xbox. Exactly. It's exactly how it works. You get to keep reusing it over and over and over again, and you can do the math. And if you're making $100 a week and you own the stock at $15, eventually, after 5 weeks of making $100, you made 1/3 of the price of the stock back. Now it's like you own DraftKings at 12, so it can get really good. It can get really good. Gengar says, for some reason, it sounds easier on calls. Yeah, it probably does a little bit because with calls, you already have to have the shares. That's the reason why it's a little easier. With puts, you don't own anything, and then you're trying to maybe get some shares or just collect that premium. But what a lot of people will do is they'll see DraftKings and they'll say, okay, I like DraftKings at this price, but it does worry me that it could go down a little bit more. So some people might buy 100 shares right now, and then they'll sell the 12 strike put, and then a 10 strike put, and then an 8 strike put. And if it goes down through all of them, well, then they're getting averaged in really low with shares. And if not, then, it is what it is. But you guys can do the math on this stuff and figure out, like, if it goes down through all your strikes, what average price you'll be in at, and all types of stuff. And if it doesn't work out, well then, hey, you make a ton of premium. It's honestly one of the best ways to trade. I would recommend it to everybody. Everybody should do this. I will say though, doing the stuff that I'm explaining right now really confuses a lot of people. It really does. It messes them up. And I get it. It's a confusing thing, but just seriously, take the time to learn it. I think you guys will love it. I just posted a link to an awesome YouTube video here in the chat. I'm actually going to play that video right now. I'll talk to you guys tomorrow. I think it'll be a pretty good way to go. But I appreciate you guys asking these questions. If you have any more, let me know tomorrow and we can go back over it again. But yeah, I appreciate you guys being here. It's been a pretty good day overall, and I'm going to go ahead and let this YouTube video play for about 10 minutes so you guys can watch it if you want to. I also sent a link in the chat if you guys want to watch it there, but I'll answer one more question. Gengar says, I thought I could buy a call and then not exercise my right to get 100 shares. Yeah, well, see, Gengar, we're talking about selling calls, Gengar. Selling them to open, not buying them. See, that's the thing. To sell a covered call, Gengar, you have to already have 100 shares. You have to already have it. So I know it's real confusing. Check out that video I sent, Gengar. And please, Gengar, come back tomorrow and ask more questions, and I will help you out. So be ready, guys. Have a great rest of your day. I appreciate you all joining up, and I hope I was able to help some of you guys out, because I'm not kidding. It's the best way to trade. You will never go back to buying really risky calls and puts if you learn this, because you will be selling it to the risky people. You'll love it. But have a good one. Please come back tomorrow and ask some more questions.
Put the odds in your favor. The strategy that we're going to be talking about in today's video is my favorite strategy, and also it's the closest thing you can get to a win-win in the options market. This strategy, 1, you don't have to predict direction, 2, time's on your side, and then 3, you have a statistical edge in the market. So before we get into today's video, don't forget to subscribe. I post brand new videos every single day. Let's get right into it. The strategy that we're talking about in today's video is the cash secured put. Basically what it is you get paid up money straight up front to have the obligation to buy a certain stock at a certain price by a certain date. And if that sounds complicated, I'm gonna give a couple examples later in the video, but a quick explanation right now is basically, if we look at Apple, let's say Apple is at $130. And let's say we look at the 100 strike put that expires on, let's say, May 21st. You might get paid $50 for that put. So if you were to sell that put, you'd get paid $50 up front. If Apple is below $100 by May 21st, which is your expiration date, you have to buy Apple shares at $100 each. So basically, you're getting paid premium up front to have the obligation to buy a certain stock at a certain price by a certain date. And you can do this with a ton of different stocks and a ton of different levels and strike prices. And I'm gonna give a couple examples at the end of the video, but I wanna give more of like an overview of the strategy first. And back to, like the overview, one of the main benefits about this strategy is you don't have to predict direction. Let's say if we go back to the Apple example where the strike price is 100 and Apple's currently at 130, if Apple goes up, you make money. If Apple goes sideways, you make money. Even if Apple goes down, you'll make money. So the only way you lose is if the stock goes below your strike price. But even if it does that, you just buy shares for the long term. So like technically, yes, you might lose in the short term because you might have to buy shares of Apple at $100 each and they might be at like $97 each. But if you like the stock for the long term, that short-term loss might turn into a huge long-term winner. So it's like, you don't have to predict direction, and even if you're wrong, like you literally just buy shares at a low price. So it's a great strategy in that sense. And then the second huge benefit is time, or theta, is on your side. If you've been trading options for long enough, I'm sure at one point or another you bought a call option, right? Let's say you bought a call option and then the stock shoots up, but then your call option loses money and you're like, how is that possible? And that's because of theta decay. So basically every single minute options are just losing value. And when you sell puts, that actually works in your favor because you're short the put, and the further it goes down, the more money you make. So every single minute that passes by, time is working for you, and that's a great asset to have, on your side, especially in the options market. And then the third reason is you have a statistical edge while trading this strategy because, all right, well, I don't want to confuse anyone too much, but long story short, implied volatility is greater than historical volatility. What that means in simple terms is, on average, the market might be expecting a $5 up or down swing in Apple, right? But on average, we might only see a swing of $4. So because of that, the options market is priced in a way where options are a little bit too expensive, and you would take advantage of that because you're selling the options, you're selling the puts, so that actually works in your favor. So long story short, you have a statistical advantage because of the way implied volatility is and the way options are priced. And then on top of that, if you're selling puts on a stock you like for the long term, let's say Apple, or let's say Tesla, or NEO, or Palantir, or whatever stock you pick, if you like that stock for the long term, in the worst case scenario, you just pick up shares of that stock at a low price. So it's just an amazing strategy, but it's not a guaranteed win because let's say you had to buy Apple at $100 each. it might fall down to $80 each or $70 each before it ends up returning back to 100 or 200 or whatever. So there is a risk like any other strategy, but the risk with this strategy is you're just literally picking up shares for a low price. And if you like it for the long term, it's a huge win-win. So that's why it's my favorite strategy, but I want to give a couple examples to illustrate why this strategy is so good and just give a couple real examples in the market right now. So the first one I want to talk about is with NIO or NEO. So let's say we look at NEO right now, it's right around $37 each. If we look at the 30 strike puts that expire on May 21st, you can get about $70 for those puts right now. So if you sold those puts, the NEO 30 strike puts that expire on May 21st, you're gonna get paid around $70 upfront in cash. Basically what that risk profile would look like is if NEO is below $30 on May 21st, you have to buy 100 shares of NEO at $30 each. If it's at any price above that, you make your money. So like, let's say NEO goes up to 50, you keep your 70 bucks. Let's say NEO stays at 37 right now, you keep your 70 bucks. Let's say NEO goes down to $30.50. You still keep your 70 bucks, and then you can just buy shares of NEO on the open market for a super low price. The only way you would lose in this scenario is, let's say NEO falls below 30. Let's say NEO falls to 27 or lower, you could say. Let's say it falls to 27. You just have to buy shares of NEO at $30 each. And if you like NEO for the long term anyways, picking shares up at $30 each is a pretty great price looking at their chart. So as long as you sell puts on stocks you don't mind for the long term, it can be a huge win-win. So like, this is why I just love this strategy, because there's so many things working on your side. You don't have to worry about predicting direction. You have time on your side, and the puts are probably a little bit more expensive than they should be, which ends up being a great asset for you. And what's really cool is, let's say you sell the NEO put today, right, for 70 bucks. Let's say a month later, right? Let's say NEO is right around $40. That put only might be worth, let's say, $10, and you could buy that put right back for $10 and you make a $60 profit. So like, you shorted it at 70, you buy back for 10, and then you're just out of the trade and you keep your $70 and run. So there's a lot of different ways to win in this, and overall the odds are on your side. Another example I wanted to talk about was with Tesla. So this one's actually really cool. So if we look at Tesla, back on March 8th, if we look at the 500 strike puts, they expire on January 21st of 2022. Those puts were going for around $11,000 on March 8th, right? Tesla was falling and the put premiums were rising. Basically, let's say you sold that put. Let's say you love Tesla for the long term and you would love to pick them up at $500 each. You would have got paid $11,000 upfront in cash for selling 500 strike put that expires on January 21st of 2022. Basically, if Tesla is below $500 on your expiration day, you have to pick up 100 shares of Tesla at $500 each. If it's at any price above 500, you keep your $11,000 and run. Right now, those same puts that you could have shorted for $11,000 are only worth $5,000 now. So you could just buy those puts back and keep a $6,000 profit. You know, there's so many different ways to win with this strategy, and you could do a bunch of advanced things like buying the puts back before they expire. There's a lot of different things you can do, but really the main way I like to use this strategy is, let's say when we have huge pullbacks in the market like we saw in March and even in February. If we saw a lot of tech stocks pull back, like Apple, Facebook, Tesla, NIO. When those stocks pull back, those put premiums just explode. And what you can do is you can just sell those puts, so you really just put yourself in a win-win situation. If those stocks keep falling, you just buy shares of them at a low price because, you know, your puts might be assigned to you, and you just pick up the shares. But let's say those stocks are just stagnant, or let's say they go up. You just keep your premiums and run. So the cash secured put, it's an amazing strategy, but only if you do it right. And the right way to do it, in my opinion, is you have to do it on stocks you like for the long term. It's not worth it to sell puts or do cash secured puts on some random penny stock or something like that. But if you like a stock for the long term, you can sell puts and basically generate income every single day with only having the obligation to buy that stock at a relatively low price. So I love this strategy. Like I said, you can always buy the puts back if you don't want to hold them to expiration. Like the Tesla example, you could have sold it for $11,000 and then bought it back for $5,000 and you could have made a $6,000 profit. And that's just a random example, but the same concept applies across all stocks. So the one thing with this is, you can't be doing this if you only have like a very small account. Basically, like if you have like only $500, this strategy probably isn't for you because you need to have the money to buy 100 shares of that stock at your strike price. So for example, let's say with the NIO 30 strike puts, you would have to have your strike price times 100 in margin, you could say. So you'd have to take the 30 strike price, multiply it by 100. That would be around $3,000. So you'd have to have around $3,000 to do that. Let's say if we look at Apple, if you sold the 100 strike put, you'd have to do 100 times 100. You need $10,000 on the side. So just take your strike price, multiply it by 100, and that will give you a good estimate of what your margin would be. Let's say if we look at, any stock, let's say you found a stock that's $20, you sell a 20 strike put, you would need 20 times 100, you need $2,000 set aside. So I hope this video helped everyone. This strategy is my favorite. In my opinion, there's no other strategy that can compare, especially when you look at the pros and cons. Like I said, you don't have to predict direction. You don't really have to predict time because time's on your side. And then you have a statistical edge. And even when you lose, you're just picking up shares of a company you like at a low price. And you can just hold those for the long term. It can end up being a huge winner. So I hope this video helped you. If it did, I would really appreciate it if you could hit that like button and leave a comment down below. But other than that, thanks for watching.